My name is Jeffrey Kennedy and welcome to Elliott Wave Junctures. In today's episode we're going to examine candlesticks and actually a high probability trade setup that candlesticks offer. And it's not exactly what you might be thinking. First, let me explain what a candlestick is. This is a Japanese candlestick price chart, and what you have are essentially two components. You have what is considered to be the real body, and then you have a shadow. Okay, in this candlestick right here where the body is green, possibly or sometimes white, what this essentially means is that the close is above the open, and the distance between the intraday high and the close represents the upper shadow. The lower shadow is the distance between the open and the intraday low. When you have, say, a black candle or a red candle in this instance, what this means is that the close is below the open. The intraday high, the distance between the intraday high and the open is the upper shadow, and the distance between the close and the intraday low is the lower shadow. This pattern here, where you have the red candle here to the right and the green candle here to the left, this is actually considered a bearish engulfing pattern and forewarns of a small change in trend, sometimes 3 periods or possibly even 5 periods. This is what a candlestick price chart is or looks like. It's based on the same information as an open, high, low, close price chart. Now, if you'd like to learn more information about candlestick analysis, I highly recommend Steve Neeson's book on Japanese candlestick charting techniques. Now, let's go back to the trade setups that I'm referring to. Now, I'm a big fan of candlestick analysis, and for example, I like bearish engulfing patterns. I'm always on the lookout for those types of candlestick patterns to identify potential trading opportunities. But what I'd like to point out today are the ones that don't work out, or the failed signals. For example, what we have in this price chart of Apple is a morning star. This is traditionally a very bullish 3-candle candlestick pattern, which actually would argue for a rally or a move up in prices. What you'll see, though, in this instance here, it failed. It did not work out. We didn't see prices move to the upside. In fact, once we took out the extreme or the low of the actual candlestick pattern, it actually opened the door for a sizable move to the downside of almost $30 here. Next, let's take a look at another example. Here we have another 3-bar candles or 3-candle candlestick pattern. This is an evening star and very similar to the morning star candlestick pattern. This is actually a bearish reversal pattern, and it's a high probability bearish reversal pattern. But look what happened the following day. We actually saw an up move or a bullish candle. In other words, this bearish candlestick pattern failed. Okay, and look what happened as a result. A very sizable move in price, almost a doubling in price actually, because we were trading in the 400 handle at that point, and we went almost to above 600. This is the weekly chart level. Now let's look at a few more examples. Here, as this trend has developed since 2009, we've had 2 bearish engulfing patterns here which did not give way to any kind of decline. In other words, they failed. But look what happened in the following months. Here you have 3 months of advance following that failed bearish engulfing pattern. And here was another bearish engulfing pattern that also failed that introduced 6 months of advance, because this is a monthly price chart. Here we actually had a hanging man, which is also, it's a single candle bearish reversal pattern that did not give way to any type of decline. It actually, again, led to further rally. So what's my point with this? Is it to discredit Japanese candlestick analysis? Absolutely not. I'm a huge fan of candlestick analysis, big fan of Steve Neeson's. I enjoy the work. I love the work. I look at candlestick patterns all the time. Today's lesson is that whenever you see a situation like this, where you have a high probability sell signal or a bearish reversal candlestick pattern, and it doesn't work out, many times what you'll see is that it turns into even a higher probability trade setup or trade signal in the opposite direction. Just as it did here, this failed bullish morning star candlestick pattern gave way to a very sizable sell-off to the downside. This bearish candlestick pattern, this evening star, which should have given way to further decline, actually signaled an even higher probability trade setup in the opposite direction, as did these 2 bearish candlesticks as well. So whenever say for example a bearish candlestick fails, look for a high probability sell setup. If a high probability sell signal or bearish candle forms and it fails, look for a high probability buy side trade. That